and market movers. This is The Pulse with Francine Lacqua.
So stocks gaining in Europe today as investors move on from the weak U.S. consumer confidence reading that rattled markets yesterday. Now let's get straight to Frederique, head of investment strategy at RBC Wealth Management. Frederique, thank you so much for joining us. There's a lot going on. There's a trade war. Copper can now be part of it. But there's also hope, a little bit of renewed hope of something in Ukraine. When you look at the markets, they were freaked out by U.S. economic data. Are they now going to settle?
I think that the mood music today is slightly better. With the meetings between Macron and Trump yesterday, with the announcement of potentially a more structured peace deal, the stepping up of the UK defense spending, potentially also in Germany, that would appease tariff concerns. But they are still there, and markets are quite complacent about them.
So, Frederique, let's also get a briefing, of course, on this minerals deal. Ukraine is said to have agreed with the U.S. to jointly develop its natural resources in what may pave the way towards a ceasefire with Russia. Now, the Ukrainian President Volodymyr Zelensky is planning to travel to the U.S. on Friday to seal the deal. So let's bring, of course, Josh Gallo for the very latest. Joshua, how close are we to this ceasefire in Ukraine?
How close we are to a ceasefire is a little bit up in the air, although this mineral deal is certainly a step in that direction. It looks as though there's been a pretty big breakthrough after tensions were bubbling up quite high over the last couple of weeks. Of course, Trump was threatening Ukraine, basically telling them they were not going to get anything else from the U.S., that he might lose his country. And that was coming on the heels of an offer from the U.S. to basically take $500 billion from their extractive industries revenues over the coming years. It seems that the U.S. has softened its position a bit, and Ukraine has bent as well, and that there's a deal coming out of it. We don't know the deal, we don't know the details of the deal yet, but of course we do know that some of that is backed down, right, in order for them to come together. It sounds as soon as Friday that Zelensky may be in Washington to sign a deal, which would be a pretty remarkable spectacle after what happened last week, where Trump declared him a dictator who had actually initiated the aggression against Russia, and Zelensky said that Trump was living in a disinformation bubble of Russia's making. So it's a pretty swift turnaround, although the extent to which this is going to lead to a ceasefire is really up in the air, and it also has all of the hallmarks of a political deal for Trump, who will, of course, need Congress's support to continue to fund Ukraine. And he has promised his constituents that he was going to bring an end to the war. So if negotiations drag on to bring peace, he will need to have something to show for that.
Yeah, Josh, thanks so much. Josh Gallo there with the very latest, of course, on this tentative peace deal. And we're hoping to find out more about the minerals deal. Let's get back to Frederique Carrier from RBC Wealth Management. Frederique, you were basically saying that there's a lot to sit through in terms of some of the data points and some of the news that we have to put aside, because for the moment there's nothing concrete. I mean, one thing that I feel like in your note is very appealing is that you think markets are complacent.
That's yes. If we look at, for instance, trade tensions, reciprocal tariffs could mean for the UK and Europe tariffs of more than 20%. The market are hoping that it's really a negotiating tool. And certainly we have seen this leverage play out. Same thing on Canadian stock markets. Tariffs on Canada and Mexico would impact the Canadian economy, the Mexican economy. Canadian stocks have not responded to that at all. If you look at banks, which would be affected by the worsening macroeconomic environment, they're not reflecting that. Railway companies are certainly not looking at this worst-case scenario. They would be very affected. So we think markets are complacent. And perhaps because of all the U-turns we've seen, these sort of policies, they are right. And certainly we are aware of this risk, but we are fully invested.
Frederique, where's the most complacency? A lot of the U.S. equities, of course, are priced to perfection.
Yes.
Is that where we could see a lot of wobbles, or are there other parts of the markets that make you nervous?
So we've seen the U.S. market has been flatlined really over the last 6 weeks or so. The recent rally in Europe is perhaps a little bit more fragile in our view, now that valuation levels have increased a little bit, increased on the expectation that tariffs will not be a threat, that there's going to be a big relaxation in the debt brake, and that there will be a lasting peace deal. The jury is still out as to whether these things are actually deliverable.
Frederique, do you worry about the health of the U.S. economy? That's too much has been priced in, and we're seeing consumption, University of Michigan, we're seeing a little bit of erosion of the confidence.
There is erosion of confidence, certainly more scrutiny in terms of the capex of AI companies, but also very importantly, the consumer. We've seen weaker retail sales. We've seen a slowdown in housing market, and the recent consumer confidence surveys point to really a worsening environment. And of course, it's been a lot of activity from the new administration. Clamp down on immigration, the DOGE layoffs, and also tariff threats. All of that is starting to play on consumer minds.
I mean, we're also seeing an extra threat of tariffs against copper. I mean, this would take a huge proportion.
It would indeed. So yeah, I think it's a mistake to take all these threats lightly, particularly given that for the Trump administration, tariff is also now a source of revenue to fund tax cuts. It's not only to protect industry, U.S. industry.
Frederique, when you look at some of the narrative that comes out of China, is it a good time to go back in, or do you see the U.S. trade war getting worse, especially between the two superpowers?
So you probably want to wait until April to see really what will happen to tariffs, but we do feel that the narrative in China is changing. The last two rallies were really predicated on the reopening of the economy and then the change in policies. But what this rally is different is that it's from the bottom up, it's technology stocks, and they're still quite cheap compared to their peak valuation levels in 2021 and 2020. So we think that there's potentially more legs to this rally, particularly given that foreigners have not stepped in, and we do expect some support for the consumer.
And this is, just to be clear, Chinese technology stocks, I imagine, on the back of
Chinese
DeepSeek.
Technology, that's right,
And
yes.
then we have Nvidia later today, so that will give us an even better clue of what happens in the tech space.
That's right.
Is there anything else when you look at some of the big tech earnings in the U.S.? Again, there were a couple of earnings here and there that made investors worry about how fast the things will be adopted, especially some of the Microsoft data centers that they haven't focused on so much.
So that news grabbed headlines, but it seemed to us that it was more of a confirmation of what had been said before. We're really seeing this group start to diverge with a lot more scrutiny on capex and the returns that are to be expected on capex. And if you think of the FANGs, we had a similar profile where FANGs moved together for a very long time, and then eventually there was a diversion of performance. So stock picking will become very important.
So, Frederique, given all of this, some of your key calls are basically commodities and infrastructure.
Commodities, but long short. Commodities as a diversifier, because a lot of these commodities move not to the business cycle or the interest rate cycle, but really to the weather cycle. And so a very flexible strategy can be a good diversifier.
Okay, Frederique, thanks so much for joining us. That was Frederique Carrier, Head of Investment Strategy at RBC Wealth Management. Now, coming up, biotech company Novonesis shares jumped this morning following full-year results. We speak with the Chief Executive, Ester Baiget. That's next, and this is Bloomberg. Novonesis shares have gained the most since June after the biopharma company reported earnings, which reassured analysts. Well, we're now joined by Ester Baiget, the Chief Executive of Novonesis. Esther, thank you so much, as always, for giving us a little bit of your very, very busy schedule. Now, there are a couple of questions that are key in terms of GLP-1s and whether they sparked a bounce in new products initiatives. But what are you most happy about today and excited for the future?
Thank you for the question, Francine, because yes, I am happy. Not only about today, I'm happy overall. I'm very pleased about the extraordinary year we have had. And I'm also very pleased and excited about the future ahead of us. For the year we have had, I'm pleased with the 8% growth and the how of the 8% growth. It's a profitable growth with 36.1 EBITDA margin, but also volume growth mainly. 6% of that growth is coming from volume, 2% from pricing, and growth across all portfolios, across all divisions, across all segments. Growth in domestic markets, double-digit growth in emerging geographies, growth from innovation. Close to 30% of our revenue that we generate is from products less than 5 years old, with 45 new launches. So really, really robust growth behind. And then also I'm very pleased about the super extraordinary steps we've made on the combination of two extraordinary companies. We're well on track with the cost synergies with 80% run rate. We see already the examples of the growth synergies coming in. And then with a strong guidance ahead of us with 5 to 8 growth, with also profitable margins, where again, same, continuity of the same, across growth contribution from both portfolios, growth in emerging geographies, growth from price, 1% of price, 1% growth from the growth synergies materializing and being there as a contributor of that growth. And maybe the one I'm more pleased about, strong employee engagement across the whole organization and a team which is rallied overall.
Esther, talk to me a little bit about this EBITDA margin that is also one of the highest amongst your peers. How can you keep that up longer term?
Well, we deliver extraordinary value for our customers. And what we bring is truly unique. We make biosolutions, enzymes, microbes, probiotics, that they provide functionality to our customers, and they enable to drive value generation for their end customers, consumers. We talked briefly about GLP-1 before. Let me focus, for example, in food. In food, we see a strong need and a pull from our customers for cleaner labels, for solutions that allow lower sugar added, less salt, functionalization, high protein content, but at the same time, protecting the natural preservation of the goods in a natural way. That's everything we do. And there is an open window for reformulation. And then when that window opens, that's where we came in with our enzymes, with our microbes, with our peptides, and with our probiotics. And that we do across fronts, from dairy, from beverages, from baking, from plant-based foods, across the whole portfolio. That's a strong driver of growth. Same applies on the building blocks of the future. Go ahead. Sorry.
And so, Esther, is any of the bounce in innovation also due to your customers wanting to increase volume?
We grow with our customers, but we typically grow above our customers because we grow through penetration by expanding the pie of penetration of biosolutions. Biosolutions, they're present every day in your daily lives, from the bread and the yogurts that you eat to the detergents that you use or the biofuels in your car. But we still have a small penetration as part of your daily lives. We touch more than 2 billion people every day. We are going to touch you more every day. And that's the driver of the growth. So we outgrow the markets that we present by penetration, a little bit by price, but mainly the majority of our driver is volume growth, growing faster than the segments that we are in.
You've also now passed the 1-year anniversary of the formation of Novonesis. So are you ready to maybe do some M&A and actually absorb some of your peers?
We just announced, so first we are very pleased with the combination of the two extraordinary companies, making an even stronger one. We just announced a couple of weeks ago an acquisition where we bringing home the commercial arm and the access of such a critical segment as animal nutrition and health on our enzymes, and then bringing the cross-fertilization of enzymes and probiotics together. We had an alliance with DSM Firmenich with enzymes. We had probiotics going into animal, and now by this acquisition we will have the cross-fertilization of the full value chain to be a better partner of our customers in this very attractive segment, and growing also faster and accelerated than the market growth. This is one step or one milestone showing that we're here to grow, and we're going to continue to invest across all fronts organically, mainly organically. We're also going to invest on the capabilities to continue to innovate, also to continue to expand the capabilities to produce and cap with the growing demand of our solutions. And you've seen one example that M&A is a toolbox of accelerated growth.
Esther, do you think there will be consolidation this year in general amongst your peers?
we do our job and we do our part. We believe purely on the value of being a pure biologicals power play. That's what we see we can generate cash value for our customers, to be extraordinary partner on what it matters them. Solutions that are based on biology, solutions that they are fulfilling their needs of functionalization on even nutrients or the building blocks, and that's where we're going to continue to stay. We stay focused on what we do, and then we let others do what they think they need to do.
Given everything that's happening also from the U.S., but trade wars, concerns about countries looking inwards, does it change your pricing measures, Ester? Do they have to go up this year?
Now, we typically price value for our customers. That's how we do the pricing mechanism. It's on the value that we bring in. It is on the value-added capabilities that we bring to our customers to grow faster than their peers. And typically the features that we bring in, they are not price substitutional. You cannot bring a low sugar added with cheaper sugar. You cannot bring less salt with cheaper salt. You cannot enable microplastic replacement in household care with cheaper polymers. So the solutions that we bring in and the value that we add to our customers, it enables them to differentiate, and that's how we price, by capturing our fair share of value, but also allowing our customers to grow and come with better solutions to their consumers, to their own customers.
Esther, thank you so much for joining us. As always, Ester Baiget, they're the chief executive of Novonesis. Now, we'll have plenty more, of course, on some of the corporate earnings that are also coming out with earnings, but also private credit firms struggling to raise money at the levels seen over the past few years. We'll discuss the market next with a new newsletter. That's coming up shortly, and this is Bloomberg. Now, private credit firms are struggling to raise money at the level seen over the past few years. Well, Bloomberg has a new newsletter. We love a newsletter, Going Private, covering the private markets and the forces moving capital away from the public eye. Well, Bloomberg's Silas Brown joins us for more. Silas, I'm excited about the newsletter. It's going to be punchy. I know it's going to be fun. So talk to us about the crazy bonker stuff that's been happening in your space.
Yeah, I think there's a recognition at Bloomberg that private capital is a kind of, it's a runaway train that's gathering assets both on the equity and debt side. And I think in order to kind of collate the brilliant reporting that we do across the globe, we thought a newsletter might be the most appropriate vehicle through which we can kind of transmit all of our longer form reporting.
And it's interesting, you have in private credit, you're either doing really well, or actually if you're doing so-so, suddenly you're doing quite badly.
Yeah, it's a tale of two cities in private credit, and I think to a certain extent in private equity as well. I mean, I think there's these kind of scale-hungry monsters at the top of private credit that are just are pulling away from the pack, and that's often at the expense of these smaller, more mid-sized firms that are kind of falling a bit by the wayside.
Okay, so what are you going to write about today? What's the one story that I can't not read about?
Well, so with the newsletter, which is launching today, we're writing about JP Morgan's foray into direct lending. We're writing about increased regulatory scrutiny in private markets, and we are also writing about football finance as well.
Oh, we love a bit of football finance. So how do I sign up? Bloomberg.com
/Going Private.
There you go. You've heard it from Silas Brown. Don't forget to check out the new Bloomberg Going Private newsletter that goes live today. Now, Nvidia's fourth quarter earnings later today will also be, of course, scoured for signs of how AI spending is holding up, with big tech stocks in retreat. You can see Nvidia ahead of that, getting some 2.8%. Now, coming up as the world's finance ministers descend on Cape Town, we get the latest on how the G20 is responding to President Trump's tariff threats. That's coming up next, and this is Bloomberg. Good Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua in London, and these are your top stories. Bloomberg learns that Ukraine has agreed with the U.S. on the terms of a minerals deal. Meanwhile, President Trump adds copper to his list of possible trade tariffs. European stocks rise while treasuries steady as investors move on from the weak U.S. economic data that had rattled financial markets. Plus, focus shifts to Nvidia, which reports fourth quarter earnings today with attention on its AI build-out and DeepSeek impact. So financial ministers and central bank governors have been meeting at the G20 in Cape Town today. This comes as South African President Cyril Ramaphosa called for an enhanced cooperation within the G20 as Donald Trump upends the world order in pursuit of its America First agenda. Now, for more on all of this, let's get straight to Jennifer Zabazaja, our Chief Africa correspondent in Cape Town, who joins me now. Jen, you've had amazing guests all morning. What does Ramaphosa's enhanced cooperation actually look like?
Right, Fran, that is really what a lot of these leaders are deliberating right now. If we go just based on what we did hear from the president earlier today, he believes that multilateralism is really the only way. And what he says is a rules-based order in which he sees this getting many of these countries through a lot of the geopolitical tensions. And he's not naive. You know, he talked about a lot of the concerns and the lack of cohesion among these members and really why he believes that this is the forum, this is the grouping of nations that are able to and should be able to unify around some of these issues. He also did use part of his address to talk about some of those items which we know are top of his agenda, and that is rising debt levels amongst African countries and the global south and reform of a number of these multilaterals. And he says if we continue to see a lot of this inequality and disparity continuing to grow between the developed countries and the developing countries, that in his mind will lead to even more demise and catastrophes to society. And so we're hearing a lot of those same sentiments echoed from a number of the other leaders. I was just listening briefly to Ajay Banga from the World Bank. We also have Kristalina Georgieva here speaking as well, talking about ways in which these countries can work together in an effort to fortify their own economies. But the elephant in the room, of course, is that we're seeing, as many leaders have told us here, multilateralism under threat, especially with the absence of the highest U.S. ranking member, which is Scott Bessent here. And so the question will be, how do they push this forward throughout the rest of this G20 presidency that South Africa is going to hold? And will we see President Trump of the U.S. attending this later this year? And what does a communique then look like, given all of the disparities between these countries, between these member states?
Jen, you've also been speaking to the French finance minister. What did he say?
Yeah, Fran, it was interesting to speak to him. You know, a lot of these leaders are dealing with their own domestic issues back at home. We spoke to the German finance minister, who, of course, has just come off of the election there, coming here. But the French finance minister is fresh off of a meeting in Washington alongside President Macron and also speaking to President Trump. So here's part of what he told us about their discussions there and about how things move forward.
We discussed all the issues, trade, tax, non-tariff barriers. We agreed to continue to talk, which is a step forward. We met for the first time. We met on a one-on-one meeting, and also, of course, Secretary Bessent participated to the meeting with the two heads of state, President Trump and President Macron. We'll meet again with the IMF meetings in Washington in April. We exchange sale numbers, and so we will discuss within OECD as far as taxes are concerned, and at the European Commission level for trade.
And Fran, taxes are also a topic of conversation here at these meetings. Of course, many of these countries know that taxes are an important part of them. They're collecting revenue for themselves, but how they do that and maintain stability within their own countries is something that they're currently deliberating right now. But that was just part of our conversation with the French finance minister. We have a few more coming up, though, from here.
Looking forward to it, Jen. Thank you so much. Jennifer Zabazaja there in Cape Town. Now, the European Union is planning an emergency summit to discuss accelerating military aid for Ukraine and strengthening the bloc's defense. Now, for more on all of this, let's also bring in Bloomberg's Oliver Crook. Ollie, some EU leaders, of course, are meeting this morning ahead of the summit. What can we expect from that concretely?
Yeah, so Francine, from the meeting that we have today, it's the European Council that's been convened by Antonio Costa, the president of the EU Council, to basically discuss a number of things ahead of that emergency meeting next week on March the 6th that's being convened in Brussels to basically discuss sort of Ukraine strategy. And what they are trying to get today is the debrief from Emmanuel Macron after his visit to the United States with his discussions with President Donald Trump, which didn't seem to be totally disastrous from the European perspective. Not sure there were a huge amount of sort of breakthroughs on that level, but that'll be sort of what the other leaders are going to be hoping to get from Emmanuel Macron. And then the sort of perennial question for the Europeans: A, what is your sort of Ukraine strategy? And B, how do you pay for all the defense spending? And some of the things that are going to be discussed in greater detail at this meeting and indeed next week's meeting are basically ways to release that money. So some of the things that have already been discussed is basically the EU easing some of its fiscal rules in terms of debt, making it easier for member states to spend on defense without it being sort of included as part of the broader fiscal rules, repurposing some of the existing funds that already exist within the EU, potentially the recovery fund, the cohesion fund, these sorts of things. Could money be redirected towards defense? There is also this question about expanding even further the European Investment Bank's mandate. Now they can invest in dual-use technology, both military and commercial. Maybe they can open that to just military sort of investments. These are the kinds of things. And of course, Francine, the one question that hasn't gone away is the question of joint debt, joint borrowing. I think that is one that is a little bit further down the line, but these will all be sort of the present options and the menu of options being discussed by European leaders this week and next.
Ollie, Ursula von der Leyen also hoping to pitch a series of policies to boost competitiveness in Europe. We've heard about it before, but again, is anything actually going to be achieved?
Yeah, so listen, we've heard about it before. We've had the sort of the drafts. What we are expecting today is the sort of official publish of the Industrial Clean Deal. This is basically the rebrand of the sort of Green New Deal that had been sort of pitched with the last commission. This is going to be one that, yes, wants to preserve a lot of those sort of climate goals and create some incentives to have investments in climate, to basically ease state help rules, basically ease sort of regulations around taxes in order to get more money flowing towards that technology, but also a more pragmatic approach, one that is less focus entirely on those climate goals and a little bit more focus on competitiveness, which will also mean, Francine, rolling back a lot of regulations, rolling back some of those ESG ambitions, basically trying to simplify regulation. This has been the big complaint by many companies across Europe, that the EU is just too stringent on already a structurally uncompetitive market due to high labor costs, high energy costs, having all of these sort of reporting requirements in terms of carbon, in terms of supply chains, all of these sort of things. They want to present a new sort of version of that to businesses. They want to make carve-outs for SMEs to make it easier for small businesses to comply. And let's not lose sight of the fact that, Francine, that Mario Draghi report was written in September. Its original aim was to make Europe more competitive against China. Now you have the Trump administration. Increasingly, Europe's threat to competitiveness is not just from China. It is also from the United States, particularly as the United States slashes regulation. Europe needs to respond.
Ollie, thanks so much. Oliver Cook there in Berlin. Now to a Bloomberg investigation that has been months in the making. Foxtons is often seen as an entry point for aspiring real estate agents, but junior employees have told Bloomberg of unwanted touching, drunk driving, and senior staff who either ignored the inappropriate behavior or were complicit. Foxtons says it's concerned about the reports, but that it does not recognize the allegations, that issues are not taken seriously. Well, joining us for more is Damien Shepard, who spoke to more than 20 former and current Foxton employees to report the story. Damien, I mean, this has been a pretty Olympic effort, 6 months in the making of you investigating, speaking to employees. Can you give us some of the details about what people have been telling you about the culture at Foxtons?
Yeah, I mean, it's been a pretty grueling 6-month investigation. I've met with 20-plus former and current Foxtons employees who have told me about several different allegations related to groping inside the office and outside the office, racism, anti-Semitism, other forms of sexual harassment, bullying across the board, and rife drink driving. One of the most concerning parts of this investigation is that my sources tell me that the majority of this behaviour is happening against young, junior members of staff, potentially the next wave of real estate leaders. And for the real estate industry, which has a slightly checkered reputation, a few scandals over the years, the big question mark is, if this is the first stage of the careers of these young future real estate leaders, then how does the industry ever change?
Yeah, and through your reporting and investigation, it seems that when employees spoke up, what happened to them?
So, yeah, this was a real light bulb moment in the investigation. So it's worth explaining the leads process. So a negotiator at Foxtons is given a flow of leads, which is essentially a series of clients who want to buy, sell, let or rent a property. Now, sources have told me that when they've spoke up against things that have happened to them and to other people in the office, they've suddenly seen their flow of these leads cut off dramatically or sometimes completely. Now, these people are then put on performance targets and eventually, in some cases, as my sources have told me, dismissed on poor performance. And the overarching theme there is people are standing up against this culture within Foxtons, but if you do, according to my sources, you're at risk of your work being cut off.
So what do Foxtons say about your reporting?
So Foxtons have responded to us on this. They said they're concerned about the contents of our investigation. They do insist that there are policies in place for people to come forward, whistleblowing services within the company to say when these allegations have happened towards you. But it's a really interesting time now for the company. The share price has declined since our story went live yesterday afternoon. So it'll be very interesting to see what the weeks ahead have to come.
An important piece of journalism. I urge everyone actually to go and to look at our big take on this. Damien Shepard, Bloomberg residential real estate reporter. Also, the culture at Foxtons is the topic of this week's In the City podcast that I host alongside Allegra and Dave. Damien was on it, and it will be out this week. And it's over 20 minutes that you really try and understand some of the nuances through Damien's reporting and what happened in the last couple of years. Coming up, Bloomberg has learned that the U.S. and Ukraine have agreed to a minerals deals, but where does that leave Ukraine's energy security? We discuss that next. This is Bloomberg. Welcome back, everyone. Now, Bloomberg has learned that Ukraine has agreed with the U.S. to develop its natural resources as it seeks a ceasefire with Russia. President Trump says he expects Volodymyr Zelensky in the White House on Friday to sign the deal. But as Ukraine hopes to recover from 3 years of war, securing its power generation will also be key. Well, joining us now is Maxim Timchenko, the chief executive of Dtek, Ukraine's biggest private energy company. Thank you so much, Mr. Timchenko, for coming on. First of all, it's been a whirlwind 3 weeks where we really try and understand President Trump's position, some of the things that he said, or the fact that he doesn't want to accuse Russia of aggression. How have the last 2 to 3 weeks been for you?
So everything moving very fast. And probably it's too early to talk about details of potential deal. But our position is everything related to investments in Ukraine should be welcomed by us, by Ukrainians. We need a lot of capital and funds to recover our country, to rebuild our infrastructure. And I think that a good sign that appetite from investors is coming.
So Ukrainian power system is going through enormous transformation, right, because of the damage caused by the Russian invasion. How is it going to look like in the future? What do you need today to make sure that there are, good foundations for the future?
I think that we have a unique chance to build one of the best energy system in Europe. With such a devastating destruction, and this scale of destruction as we have for the last 3 years, we need to build new. We need to build new power generation, clean. We need to build new power grid, digital. We need to bring all the best technologies in Ukraine now. And for this, we need capital. We need investors, we need companies with technologies, with knowledge, understanding to join us, Ukrainian companies, to build new energy system of Ukraine.
But how much do you need today? I think you estimate that 90% of your power generating capacity was destroyed, but then that you recovered a certain percentage of it. Yeah. How much of that is beyond repair?
Today, Russians targeted mostly thermal power generation, and that's what our message. I think 40% is not recoverable. But we replace it by building new projects in renewables, wind parks, solar parks, battery storage. This is what we are doing already now. So basically, the irony of this war is that green transition accelerated in Ukraine because of this destruction. And so we replace these old technologies by new related to clean energy.
So how do you see the energy complex in Ukraine? Again, how much percentage-wise is renewables compared to, how much percentage-wise is carbon?
Yeah, I think that we eventually will come to the position that Ukrainian generation mix will be clean, consisting of nuclear and renewables. And probably it will be the first country with such a scale of energy system and power production where we have all clean, basically for our own consumption and also to do export to European countries.
I know one of the things that you've also been really heavily investing in is energy storage, and these are plants across Ukraine to make sure that they're drone-proof and also, proofed against missile strikes. What does that look like, and are there any technological solutions that you're looking at that could be helped by extra investment?
Yeah, absolutely. Today we started realizing 200 megawatt battery storage project with total cost of 140 million euro. And that's absolutely new technologies we bring in Ukraine now. It's not one place, we put in different locations so that it's more resilient out of attacks. Of course, we bring new technologies to protect our equipment, like anti-drone nets. That's what we're doing. But the point is that we all hope that when war is over, Ukraine will be playing absolutely different role in energy security of Europe. And all our investments, which we never stopped even during the war, we continue with the purpose not only enough power for Ukrainians, but also contributing to energy security and clean power for Europeans.
Has Ukraine done enough to decentralize power, which basically means that it's more resilient to possible attacks?
Yeah, absolutely. I think that Ukraine, in our own experience, bring this message that building more decentralized renewable facilities is not only about green transition, it's about energy security and resilience. And definitely we experience it many times then when drones or Russian rockets attack our wind or solar parks, we are ready to restore it in days. If they attack our thermal generation, then it takes months and years, or some of these facilities not recoverable anymore.
What more needs to be done to ensure that there's more small-scale generation of power in Ukraine?
What we need is trust of investors to start coming to Ukraine. Bring capital, bring knowledge, and support what we are doing. Today, in Ukraine, you can find new technologies or battery storage from industrial scale, as we do, to apartments in blocks when people install it just to have power for 3-4 hours of power outages. Today, the whole country do this transition, from householdings to big companies like Dtek.
Can you talk to us a little bit about some of the arrangements that you have with bondholders? So some of the maturities, I think last July was extended by 3 years. Anything new on that front?
If you see our bond price, I think it's also a good sign that investors start seeing Ukraine as a country of opportunities. The price of bonds is growing up, more trust to Ukraine, more appetite to Ukraine. All our recent meetings with investors positive, and they start looking at Ukraine more as a country of opportunities rather than country in war. And of course, it's reflected in capital markets.
Do you think we'll see elections? I mean, this seems extremely difficult under martial law.
It's probably not something that I can comment. It's political decision. Everything good for Ukrainian democracy, for investment environment in Ukraine is good. That's our position.
Okay, thank you so much for joining us today. That was Maxim Timchenko there, the Dtek chief executive. Now, coming up, we talk a little bit about Nvidia. Traders waiting for the semiconductor giant's earnings today. That's coming up next, and this is Bloomberg. Nvidia higher pre-market ahead of the semiconductor giant's fourth quarter earnings later today. Now, in the last of the Mag 7-2 reports, as big tech stocks retreat, investors looking for clues on how AI spending is holding up. Here's Tom with the very latest. Tom, I guess, first of all, there's concern about the adoption of artificial intelligence computing, but also some of the questions will be on whether their rivals will do some of the chips.
Absolutely. We know rivals are trying to build out their own semiconductors and their own AI accelerators. That is probably a longer-term proposition. The here and now of the earnings story today will be what is happening in terms of the transition from their current Hopper, as it's described, AI accelerator, to the Blackwell chip, their most sophisticated chip. Is there an air pocket there from clients and customers holding back as they await for those new Blackwell chips to come online? And is there a pipeline as well? Is there a backlog of those chips that can support the stock going forward? So it's the demand question, it's an outlook question from Jensen Huang when it comes to the Blackwell chip. Also listening for any commentary on DeepSeek. Of course, we saw the stock drop about $600 billion lost in terms of market cap on the back of the DeepSeek story. Anything he says on tariffs as well, and anything he says about the transition to the next chip, which is called Rubin.
Yeah, and anything that he says actually moves the sector as a whole because they're the absolute king of AI.
Yes, as some analysts have said, this is potentially, at least in the short term, the make or break for these markets, the Nvidia earnings story. We've listened and we've heard from analysts from the likes of Raymond James, who said they've been checking in with supply chain clients of theirs. They do not see any slowdown in demand for Blackwell, though Raymond James do say they wouldn't be surprised if Jensen Huang and the team give a slightly softer guidance pushing out to the rest of the year. Dan Ives from Wedbush says he's still very bullish on this stock. He came through with a call. He thinks that the support and the spending around CapEx that those big hyperscalers are committed to, $325 billion this year, will be supportive.
Tom, thanks so much. Terrific briefing, as always. Tom McKenzie there with the very latest on Nvidia. We await with great anticipation some of the earnings there. Up next, Bloomberg Brief. Danny Berger in New York, and this is Bloomberg.